Good morning, you're watching Market Cafe on ET Now with me Shreyansi Singh and Kanishka Sarkar, and over the next 1 hour we'll get you updates from within the country as well as across the globe. Also tell you which stocks you should be keeping on your radar bright and early this morning. But well, speaking of stocks, first things first, Kanishka, let's take a look at the handover coming in from Wall Street, and it's not a very pretty one at that.
That is correct. Very good morning, first of all, Shreyansi. Now, speaking of the US market, well, Wall Street ended its three-day rally as the Dow closed more than 100 points lower. The S&P 500 dropped 1% as traders brace for new auto tariffs. Now, the US tariffs really seem to be the buzzword spreading uncertainty across the board. Well, stocks on Wall Street declined, led lower by tech as pressure on the tariff front mounted. S&P 500 lost more than 1%, while the Dow Jones Industrial Average fell 132 points or 0.3%. Now, the Nasdaq, that is the tech-heavy index, shared over 2% as Nvidia is dropped nearly 6%. Major tech names such as Meta Platforms and Amazon dropped more than 2%, while Alphabet lost more than 3%. Tesla slid more than 5%. Now, the stocks in the US hit session lows after the White House said that President Trump will unveil new tariffs on auto imports during a press conference. Now, General Motors and Stellantis each tumbled more than 3%.
Well, absolutely, that's what the handover then is looking like, and indeed tariffs are the talk of the town at this point because you do have that April 2nd deadline that is looming at this point. But with that in mind, let's also take a look at the handover coming in as far as oil is then concerned, because we did have oil prices rising both by government data also showing that US crude oil and fuel inventories fell last week. You do also have mounting concerns about tighter global supply following the US threat of tariffs. That is something, like I mentioned, is very important even when it comes to the oil markets. But Brent crude currently, when you take a look at the handover, 1% uptick there about coming in, $73 a barrel is the kind of level that you're looking at for Brent as well, and US WTI then 0.9% uptick, nearly a 1% uptick coming in for US WTI as well. $69 a barrel is the level that you're marking as far as US WTI is concerned as well. Both benchmarks in fact rose more than $1 a barrel during the session. So good moves coming in as far as Wednesday's session is concerned. But you do have US crude oil inventories, like I mentioned, that fell last week. Refiners did continue to ramp up production. You also have gasoline and distillate stockpiles that also dropped. So it's a good picture as far as US crude oil inventories are concerned. It's looking decent for demand. So let's really see how that pans out for us as far as oil is concerned, Kanishka.
That's correct. Now, moving on, looking at some cues to watch today. Well, back home in India, the Nifty semi-annual rejig is due today. Also, it's the weekly, monthly expiry of Nifty. Going to US, the revised Q4 GDP data is expected to be announced today. So will the initial jobless claims. Also, the merchandise trade data will be announced later in the day. Now, it's also the last day to buy shares to be eligible for an interim dividend when it comes to Motherson Sumi Wiring. In other news to track today, Royal Enfield Classic 650 is due for a launch today, and Richmond Fed President Tom Barkin is to speak later in the day. So those are some of the cues you must keep an eye on.
Absolutely, we'll keep an eye on all of those cues bright and early this morning. But tell you what, let's kickstart the morning with the top global headlines. Then there seems to be no end to the tariff war seas as US President Donald Trump announced 25% tariffs on all cars that are not made in the United States. Now, Trump in fact also specified that there will be absolutely no tariff for the cars that are built in the US. Trump's White House aide also clarified as far as the latest move is concerned, which will result in over $100 billion of new annual revenue to the country. In fact, shares of major auto companies from the likes of General Motors, Ford, Stellantis all plunged almost 5% in after-hours trading. Meanwhile, you do have Canadian Prime Minister also reacting to the latest tariff announcement with anger, stating it's a direct attack on his country's workers, and also said that he will leave the election campaign to go to Ottawa on Thursday to chair his special cabinet committee on US relations.
Now, moving on and keeping with the tariff space, US President Donald Trump has said that he would be willing to give China a little reduction in tariffs if its government approves a TikTok deal with his administration that his administration brokered. Now remember, TikTok parent ByteDance has an April 5 deadline to find a non-Chinese buyer for the company or face a US ban on national security grounds. Now Trump's suggestion comes weeks later after levying a 20% tariff on China.
Alright, then lots of headlines coming in from stateside. US, in fact, has added dozens of Chinese tech companies to its export blacklist as it doubles down on curtailing Beijing's artificial intelligence and advanced computing capabilities. In fact, the US Commerce Department also said that Chinese entities were targeted due to their alleged involvement in developing advanced AI, supercomputers, and high-performance AI chips for military purposes.
Now, moving on, even as we decode the Indian economy, let's talk about Britain. Well, if the UK economy were a stock, analysts would be issuing a hold with caution rating. The Office for Budget Responsibility, or OBR, has sounded the alarm on Britain's long-term fiscal outlook, warning that uncertainty around welfare policy changes is keeping the road ahead foggy. Now, as for growth, the UK has dialed down its expectations. Real GDP is now forecasted to inch up just by 1% this year, slashed from the earlier estimate of 2%. Now, looking ahead, the OBR predicts 1.9% growth in 2026, 1.8% in 2027, 1.7% in 2028, and back to 1.8% in 2029. Well, that is steady, yes, but far from spectacular.
Well, absolutely far from spectacular, and it does look like that hold with caution rating analogy does stand true when it comes to the UK economy. But with that, time for a very quick breather on the show. When we come back, we'll take stock of how the Asian markets are faring, so don't go anywhere. Welcome back. Thank you so much for staying tuned in. Well, as promised, let's take a look at the handover coming in from Asia then, and it's not looking good with Asia as well because there's a lot of red on the screen. When it comes to the Asian markets, Japan's Nikkei is the one that started the day 1.1% lower there on your screens. Holding on to some of those losses, 1.2% downtick coming in for Japan's Nikkei. Over in South Korea as well, when you take a look at the Kospi, that's the one that's declining about 0.6%. That's the Kospi there on your screens as well, 0.6% downtick coming in. Australia's ASX 200 as well, holding on to a tinge of red at this point. Similar moves coming in, 0.6% downtick there as well. Now, it's also the Hang Seng that's also holding on to a shade of red at this point. So, 0.4% downtick, in fact, coming in for Hang Seng. And you do have China's industrial profits, in fact, that fell 0.3% in the first 2 months of this year. That is according to official data. As you do have the economy that is facing heightened global trade tensions. So, that's what the picture is looking like as far as the data is concerned for China and Shanghai as well. There on your screens, 0.4% downtick coming in for Shanghai. Now, Nifty, of course, shut shop around 23,480 levels thereabout. And currently, what is being penciled in is a rather muted start, a little above where we shut shop yesterday. But let's really see how that pans out for us because we do not have a good handover coming in as far as US equities are concerned. Not a good handover at all coming in as far as Asia is also concerned. Lots of red on the screen for Asia as well. So let's see how that really pans out for us. But moving on then, in other news, you do have Bank of America and Goldman Sachs that have exhibited a bullish stance on the yellow metal. You do have BofA that is in fact expecting gold to trade at above $3,000 per ounce levels in 2025, $3,350 per ounce levels, in fact, in 2026. So those are the levels that they're penciling in. Meanwhile, you do have Goldman Sachs that has also upped its forecast for the end of 2025 gold price to $3,300 per ounce from $3,100 per ounce previously, now citing stronger than expected ETF inflows. That's something they're looking at along with sustained central bank demand. And we've seen a lot of that coming in this year as well, just this year. Remember, this year's record rally has been steered by economic and geopolitical worries sparked by US President Donald Trump's trade policies. So there's a lot of safe haven demand that you're looking at powering gold as far as this year is concerned. Welcome back. Thank you so much for staying tuned in. Well, time now to get you some more news and updates. In fact, the Finance Ministry's monthly economic review for the month of February is out. And while the global economy remains stuck in uncertainty, India seems to be shifting gears. In fact, economic indicators suggest that a stronger growth momentum in the fourth quarter of financial year 25, a silver lining amid global turbulence, is something that we're seeing. In fact, Prakash is standing by with the key takeaways. Prakash, over to you.
The Finance Ministry has come out with the monthly economic review report for February 2025. It says that the global economy is still under pressure and uncertainty continues to persist. But despite the fact that we are facing multiple challenges from external sectors, some surveys suggest that the world has better trust in India and its institutions, and it is advisable to avoid unnecessary pessimism coming from abroad. Along with that, despite strong global headwinds, the growth of the Indian economy has picked up in Q3 of FY25. Along with that, there is a clear sign of recovery in private consumption and core merchandise. There is significant growth in agricultural activities as well that has led to strong rural demand. Along with that, the report has also mentioned that the high-frequency indicators of economic activities have suggested improved economic growth in Q4 of FY25 on back of multiple factors such as improved export growth, pickup in government-led capital expenditure and the activities associated with Kumbh Mela. Some sign of relief on inflation front as well, where inflationary pressures have eased to a 7-month low in February 2025. But various factors are there that may pose a risk to the economy going forward. The findings of the report says that the geopolitical tensions, increasing uncertainty around trade policies and financial market may pose significant risks to the outlook for growth next year.
With some positive cues as far as the fourth quarter of the current fiscal is concerned, though there are some risks for the next fiscal year as well. However, now moving on to some state-specific news. In a reversal of a previous proposal, the Maharashtra government has scrapped its plans to levy a 6% sales tax on electric vehicles that are priced over 30 lakh rupees. Now, the Chief Minister Devendra Fadnavis announced this decision in the State Assembly yesterday. My colleague Anjali Palur brings all the details.
The Maharashtra government has now scrapped the proposed 6% sales tax that was going to be levied on electric vehicles priced above 30 lakh rupees. In the Legislative Council, responding to a question raised by a member of the opposition on how this EV tax is counterproductive to the government's ambition towards clean mobility. While responding to this question, the Chief Minister Devendra Fadnavis said that this move may not generate enough revenue, and it also sends out the wrong message about the government's commitment towards clean mobility, and therefore the state will not go ahead with the proposed sales tax on high-end electric vehicles. Now, this tax was initially proposed in the state's budget for the financial year 2025-26, and in the State Assembly, Devendra Fadnavis has scrapped this 6% sales tax, and he's also reiterated the government's ambition and the government's commitment towards clean mobility, and he also highlighted that over 50% of the newly registered vehicles in the state are now electric vehicles.
All right, thanks Anjali for getting us those updates. Moving on then, 2 more trading days left in financial year 25, and what a ride it has been. The markets in fact gave us a thriller. Foreign investors packed their bags, then peeked back in. Meanwhile, you do have domestic institutions that held the fort. Sectoral performances swung from deep red to solid green as well. The Nifty in fact has managed a respectable 5.2% gain. When you do look at the mid caps and small caps have also held their own when you're looking at them, but compare that to the Hang Seng's whopping 42% rally, and you might feel like India's equity markets under-delivered this fiscal financial year 25, that is. And this FII sell-off story, that has been one of high drama as well. So lots to look at when it comes to this financial year as well. January as well as February saw relentless outflows in 2025. But in March, you did have a reversal coming in, over 19,000 crore rupees that has flowed back into Indian equities. So are FIIs then back for good? Or is this just a tactical re-entry? In fact, we caught up with experts to decode the same. Let's go across and listen in to what they had to say.
I think the post-pandemic experience shows us that we can counter really large external shocks. And we are already seeing certain moves towards counter-cyclical policy. The tightening that was there last year has been relaxed, which is going to give a further fillip to demand and to growth. We are seeing good signs of growth recovery. And the global uncertainties, it's not certain that it will be really negative for India because we are involved in this negotiation. And in any case, India has a very diverse economy. We are not so dependent on the US market. So overall, I think things are well poised for India.
The number of things going on at this point. I think China's story is not too much, not very intact yet. We don't know where that's going. For a while, we saw FIIs flowing in there, or a lot of money flowing in there, but there are questions about where exactly it's flowing. Is the fundamental story still good, or is just the stimulus and the talk just kind of just propping up the economy there? Because China is a very weak story. I think India's fundamentals are really good, and India was never bad. It was just a relative story. In relatively speaking, India was an expensive place. It had run up quite a bit, so money was flowing out. US was relatively stronger in the risk-reward basis. Money was flowing to China, like I said. But now I see the wind blowing back. I see some data coming out, the headline data. I don't go too granular, but at the headline level, India's data seems to be very good. Inflation is slowing down. Things are growing up. The demand is growing. So there are a lot of things in favor of India.
Well, those were the cues as far as the Indian equity market is concerned going forward. Now, keeping it with the auto space, India is accelerating towards becoming a global hub of electric mobility. Now, Union Minister Nitin Gadkari, he was speaking at the Times Drive Auto Summit 2025. Well, he's made a bold and ambitious prediction, and that is India will be the #1 automobile market in the world before 2030. Well, here's a detailed report by Anjali Palod.
India is not just aiming to compete in the global EV race, it is preparing to lead it. Speaking at the Auto Summit, Union Minister Nitin Gadkari said that with strong government policies, rising consumer demand, and rapid advancements in technology, the country is on track to become world's #1 automobile market before 2030. He highlighted how increasing domestic manufacturing for EVs, the standardization of charging infrastructure, and a growing market for electric buses and trucks are propelling the sector forward.
तो अभी NHAI के तरफ से हम 670 रोड साइड एमिनिटीज़ बना रहे हैं और जहाँ चार्जिंग स्टेशन लग रहे हैं, तो मुझे नहीं लगता कि कोई प्रॉब्लम आएगी। सबसे इम्पोर्टेंट प्रॉब्लम ये कि जैसे पहले मोबाइल फ़ोन आए तो हर कंपनी का चार्जर अलग था, तो वो एक समस्या थी कि चार्जिंग सिस्टम हर कंपनी अलग अलग देती थी। बीच में हमने कानून भी तैयार किया और लगभग अब एक चार्जर में हो जाएगा। जो इलेक्ट्रिक बसेस हैं, अब इलेक्ट्रिक ट्रक भी आ रही है, तो इसमें भी अब चार्जिंग में मुझे नहीं लगता कि कोई अड़चन आएगी।
India's electric vehicle journey is already gaining significant momentum. In 2024, EV sales crossed 1.9 million units, registering 27% year-on-year growth. The battery manufacturing ecosystem has also received a boost with reduction in costs, pushing more companies to invest in this space.
सबसे अच्छी बात है कि जब हमने इलेक्ट्रिक कार और ये सब शुरू किया, तब लिथियम आयन बैटरी की कीमत ये $150 पर किलोवाट पर आवर थी। अभी मेरे जानकारी से $100 तक आई है और अब 6-7 महीने में मुझे लगता है कि इलेक्ट्रिक कार और पेट्रोल डीजल कार की कीमत सेम होगी। अभी हमने लिथियम आयन मैन्युफैक्चरिंग के लिए अडानी, टाटा, मारुति, एलजी, सैमसंग अब इसमें स्पेशल स्कीम में इनको अनुमति दी है और इसलिए इलेक्ट्रिक बैटरी भी हमारे यहाँ बड़े प्रमाण पर तैयार होंगी। और जम्मू कश्मीर में 6 मिलियन टन 6% ऑफ वर्ल्ड रिजर्व्स हमको मिला है, जिससे 60 करोड़ हम लिथियम आयन बैटरी का यूज इलेक्ट्रिक कार के लिए कर सकते हैं।
Simultaneously, the government is aggressively expanding the national highway network and building expressways, laying the foundation for the country's next mobility revolution. With clear vision, policy support, and industry momentum, India's road to 2030 appears not just ambitious, but well within reach.
All right, then that's the roadmap when it comes to the future of mobility. But moving on, then let's get you the futures and options roundup. In fact, Ansh is standing by with just that. Ansh, over to you.
Well, Nifty in the previous session has snapped its 7-session gaining streak and it has slipped slightly below that 100 DMA, but still trading around that 100 DMA only, so not a bearish sign. But yes, some cautious segment is seen here. If we talk about index options, then we are seeing some put buying happening at that 23,400 strike, indicating option traders expecting Nifty to go below this level and sustain there. Whereas if we talk about rollover data, then today's rollover as of now is 61.8% as compared to 64.1% if we compare with the 3 series average. So participation is a bit less, but we have 1 sessions today. So let's hope for some more participation here. Now, if we talk about Nifty Bank, then Nifty Bank also saw some bearish move because it has been declining for second consecutive session, down by around 0.7 to 0.8%. So 52,000 mark stays intact on upside. We need to go back above that to get back that positive momentum in the market in banking space. Whereas in index future, we are seeing short build-up happening and the rollover here is 69.3%. Let's also see what happened in index future. In the previous session, we are seeing that FII in the previous session actually covered some long by around 1,800 contract, but at the same time, they covered shorts by minus 8,700 contracts. So net to net basis, we can say that we went up by around 6,800 contract, due to which the total long position has inched higher from 32.9% to 33.6%, which is very positive. At the same time, if we talk about retail, then they have also covered some long, but in comparison to the short side, they have covered huge short by around 3,600 contracts. So they also seem to be getting a bit positive in this market.
And thank you, Ansh, for that F&O snapshot. With that, it's time for a very short break on ET Now. Stay tuned with us. We'll be right back with more news and updates on the other side. Welcome back to ET Now. You're watching Market Cafe with me, Kanishka, and Shreyansi. Well, it's now time to look at the stocks that should be on your radar today. My colleague Gaurav is standing by with a list of stocks to keep on your radar today.
Well, yes. First, let's talk about Bharat Forge, because this company has recently received an order from Ministry of Defence worth 6,900 crore rupees, and this order is for specifically guns. Let's not forget that company has also highlighted that the capital procurement for this year has been more than 1.4 lakh crore for the company. Other than that, Wipro is also going to be in focus on the back of the order win. Wipro has recently bagged a 500 million euros order from Phoenix Group. This will be a 10-year strategic order for the company. Ashok Leyland is going to be in focus because Ashok Leyland has now closed their manufacturing and assembly activity for the switch unit which was located in UK. Other than that, Piramal Pharma is also going to be in focus because company has now invested around 600 crore rupees in Piramal Finance Limited. Other than that, NBCC is also going to be in focus. A huge order win from NBCC is what we are seeing. Company has got an order worth 25,000 crore rupees. This order will be executed in the next 3 to 5 years in mannered portfolio, and as a result we will be focusing on NBCC as well. Other than that, Restaurant Brands of India, as we knew that company was raising money from QIP, they have now closed their QIP at a price of around 60 rupees per share, and they have raised around 500 crore rupees via QIP. Lastly, let's also not forget 2 dates, because Aditya Birla Capital is going to hold its meeting on 31st of March to consider fundraising, and BSC is going to hold its meeting on 30th March to consider bonus shares. Lastly, let's also not forget about IndusInd Bank. This bank is again going to be in focus because now SEBI is going to investigate the possibility of insider trading in the saga of IndusInd Bank. So definitely watching out on all these stocks on the back of the news flow that we have received in the morning.
Well, absolutely. Thanks for getting us that list of stocks that you should be watching out for bright and early this morning. Tell you what, let's also start your day right, get you some commentary that you can look at. Consumption is poised to grow according to Pankaj Murarka, who's the CIO at Renaissance Investment Managers. Let's go across and listen in to what else he had to say about the sector.
Gone over it on consumers in our portfolio. So that's a one big change or delta that we've made in the portfolio. And I can lay out my hypothesis. Essentially, if you look at the last 15 years, the private final consumption expenditure has grown ahead of nominal GDP growth. In the last 3 years, the growth is under 5%. So I believe that over the next 3 years, we'll see a sharp rise in private consumption, or the PFC as we call it. And I can see, the green shoots in terms of stars aligning for that. Inflation has surprised us on the positively after a gap of 3 years that we have seen a monthly inflation print, which is undershooting 4%. To my belief, more importantly, I think the tax and the government has made a pivot. The tax break should certainly help because that's a very significant amount eventually. And more importantly, the government has announced the formation of the ninth pay commission. So next year, the pay commission recommendations should be out and will get implemented. And we have seen whenever we have the new pay commission recommendation getting implemented, given the large pool of government employees and defense forces, it has a meaningful impact on the consumption. So I am positive on consumption or consumer as a sector over the next 3 years, and I think that will be a big driver of growth going forward.
Starts with good old Asian Paints and it cuts down to Zomato.
Well, paints as a category has a challenge, Nikunj, because there the challenge is from a organized market, which was just about 3 or 3.5 players. Now all of a sudden we have three incremental players. So the competitive intensity in that space has increased significantly, and that is likely to remain in the medium term. So despite Asian Paints being a great company, there is a heightened competitive intensity, and they will end up conceding some market share. And more importantly, it will lead to some pricing pressure and margin pressure in the industry. So probably I think paints is still avoidable. But I think what looks more interesting on the consumption side probably is staples, because I think given the fact that we're coming from a low base of consumption, I think staples will do well. On the discretionary side, probably we like more durables and probably some of the discretionary category across travel, tourism, and probably some of the retail stocks, probably where we'll see the operating leverage is very high in the business model. So a small uplift in growth can have a significantly higher impact in terms of profit growth and cash flow growth.
Let's talk about the digital businesses where you've made a lot of money. Lots of money, right? You still own Zomato, you still hold Paytm, you still hold the others?
We still continue to own Paytm. Zomato is where we have taken some money off the table because we again think that as far as the food delivery business is concerned, at current valuations, a lot of that is priced in from a next 3 years perspective. And on Blinkit, which eventually will become a bigger driver of growth, we are seeing heightened competitive intensity and significantly higher investments. So I still think while the stock has done pretty well and we own it, but I still think that probably it can go through a period of consolidation over the next 12 to 18 months, and probably it could yield. The stock price might not yield returns in the next 12, 18 months. Slightly more longer term, I still think it remains a good investment. Paytm we still continue to own in that sense. Yes.
Pankaj, let's look at IT. Now, there is a lot of yes and no. The minute I say IT, there is AI. The minute I say IT, there is fear of US economy slowing down. But there are a lot of niche IT companies which are now coming up. How should one look at this entire niche IT space now?
Well, niche IT is always a challenge, Nikunj, because my experience of investing in these companies and looking at this business over a long period of time, over the last 25 years, these kind of companies, they go through their own growth cycles. So there are periods when they deliver very strong growth, and then they have their own challenges of growth and they get into a cyclical slowdown, and that could be completely due to either their customer concentration or the TAM or the segment that they're addressing, limitation of its own, and so on and so forth. So while playing niche IT can never be a secular growth story, because these companies and the growth cyclicality in the growth tends to be much higher in these companies versus broad-based IT companies in that sense. So one has to be slightly more careful in terms of investing into these companies, because in a downturn, when they go through a growth slowdown, the growth drawdown or is much sharper in case of these companies. So and then picking a winner which can deliver sustainable growth over a long period of time is always an art, I would say, in terms of require significant stock picking skills in that sense. So one has to be and experience tells us that most of these companies, once they reach some critical size, they tend to hit some sort of an air pocket where then beyond that they really struggle to grow. Meaning the only success we have seen is in case of ER&D companies in the last 5 years post-COVID, where the world has seen a significant acceleration in R&D spends, and which is where some of these ER&D companies are now breaking out of, the larger company has broken out of the billion-dollar revenue club, and now let's say LTTS or L&T Technology is now aiming for $2 billion of revenue, and other companies are still targeting to get to $1 billion of revenue. And mind you, some of these companies are targeting $1 billion of revenue over the next 3 years, but they've been around for 20 years. So it's taken them 20 long years to get to $1 billion of revenue. So one has to be, it requires really stock picking skills to be invested into these companies.
Well, that was Pankaj Murarka on the consumption space. He's very bullish over there. Now, amid this recovery rally that we have seen over the past few days, the focus also continues to be on the financials. But which pocket should you look at within the financials? NBFCs, private banks or PSU banks? Well, here's an excerpt from that chat with Dinjoy Rani.
We became negative IT sometime in Feb. We were long IT from July of last year onwards. We were fairly bullish. But sometime in Feb, we realized that two things actually. One was obviously the uncertainty going on in the US. Already most of the IT guys are calling out that discretionary spends are not picking up at all out there. That's obvious because the way the new admin is creating so much of uncertainty, businesses obviously will hold back. They will not be spending too much. So that was one big concern. The second one, which we always thought was going to assist IT in a big way, was AI. But along the way, we realized that AI is artificial intelligence, that is becoming a disruptor for that particular space. In fact, the model that we always followed is throwing bodies at the work may not in the IT that is space may not be working out. So as a result, we I think sometime in Feb we got rid of all our IT stocks. We just have one which is actually classified as IT, but it's more to do with the auto space. So that's why we're holding on to that one. And when we did that, we raised a lot of cash along the way because we were like, at the end of the month, we were at 20% cash. But fortunately, the call on IT went well and markets kept collapsing. So we waited. By March beginning, we started deploying the cash again. And I think we've been happier that way. I mean, the IT has gone down and the market's gone up. And whatever we deployed, I think that trade has worked perfectly for us. So today, I don't think we have any cash lying with us.
Dinshaw, there are a lot of other small pockets which are now coming to forefront. Consumer durables. It touches everyone's life, but consumer durable companies in India are not very large. You have this entire two-wheeler space which is making a comeback. You got consumer discretionary stocks which are making a comeback. Anything which looks appealing to you, which in a sense was not the great trade of last 3 years, but could be a great trade for next 3 years.
So, Nikhil, actually in the consumer durable space, unfortunately, it's the way the liquidity had been sucked out of the system. I think that affected consumer durables to a greater extent. I mean, if you see the unsecured lending had gone down by banks, and with the new governor coming in, obviously that space is looking far better.
Then time now to get you updates from outside the world of stocks. Then world leaders are all set to gather in Paris today for a high-stakes summit on Ukraine security and to also lay the groundwork for long-term security guarantees. Over 31 countries, including NATO and EU members such as UK, Canada and Norway, are expected to attend this particular meeting. All right, moving on, then the controversy surrounding stand-up comedian Kunal Kamra seems far from over, with the latest twist coming from T-Series now. The music giant, in fact, reportedly issued a copyright infringement notice against Kamra's stand-up special, that is Naya Bharat, while Kamra has also slammed T-Series, calling it a stooge for being part of a corporate monopoly.
Well, moving on, hottest. That's the situation when it comes to Delhi and several other parts of India that continue to sizzle under the sun. Temperatures in the national capital near the 40-degree mark on Wednesday. Meanwhile, IMD predicts that the temperature in Delhi is expected to decline over the next few days, reducing the likelihood of heatwave-like situations. Next up, Sunrisers Hyderabad is all set to face Lucknow Super Giants at the Rajiv Gandhi International Stadium in Hyderabad today. Well, Sunrisers Hyderabad had a good start by registering the second highest IPL total of 286 runs in their season opener against Rajasthan Royals and won it by 44 runs.
Alright, and with that, completely out of time on this edition of Market Cafe on ET Now. Thank you so much for tuning in. The market takes all of the action forward, so don't go anywhere.
If you like this video, then like, share and subscribe to ET Now.